Good morning, Namaskar. Welcome all of you in this live webinar on highlights of budget 2021 organized by S.S.T College of Arts and Commerce, Ulhasnagar 4. I welcome our speaker, CA Sonam Ahuja for this webinar. Dear viewers, during this lockdown, our S.S.T College of Arts and Commerce has organized various webinars on different topics. There were some national webinars, international webinars we organized. We have one series of Vidyadan. Under this series, we organized many educational webinars and we received lots of responses throughout the country. We received many requests from the teachers as well as students to organize webinars on different subjects. So in view of those requests, today's webinar is organized by our college. And this initiative is taken by our founder principal, Dr. Purswani sir. It gives me immense pleasure to introduce our today's speaker, CA Sonam Ahuja. She is working in Protivity India Member Private Limited. She has undertaken different projects like Reliance Industries and its group of companies, HR Audit. She worked in Accenture India Limited, as well as worked in Aqua Power, as well as she worked in different CF firms. She has also qualified National Eligibility Test, and she has participated in various webinars. And I would like to mention here that she is associated with S.S.T College of Arts and Commerce. So we heartily welcome you, madam, for this webinar on highlights of budget 2021. See, budget is very important for all of us and everybody wants to understand budget. So during this webinar, in very simple words, madam will explain you what is this budget all about. It is said that a budget isn't about restricting what you can spend. It gives you permission to spend without guilt or regret. So we welcome CA Sonam Ahuja madam for this webinar and I request madam to start her presentation. Over to you, madam.
A very pleasant good morning to all of you who are attending this webinar today. First of all, I would like to welcome each and everyone who are attending this live webinar on highlights of budget 2021. I would like to thank our principal, Dr. J.C. Purswani, and Vice Principal, Dr. Khushbu Purswani, and the whole team of S.S.T College of Arts and Commerce for giving me this wonderful opportunity to present a webinar on highlights of budget 2021 today. Also, I would like to thank Deepak sir for introducing me and giving my introduction in a very pleasant manner. Also, I would like to give an introduction from my side as well. So, I am CA Sonam Ahuja. I have cleared my chartered accountancy in 2018. And currently, I am working into Protivity India Member Limited, which provides risk-based advisory services and other services. I would like to start my webinar for the day. Yes. So as you all are aware that the topic for the day is highlights of budget 2021. So first of all, I would like to give you an introduction about budget. So as many of us would be aware that every year budget has been presented in the month of February. Similarly, this year also, Union Budget 2021 was presented on 1st February 2021 by our Honorable Finance Minister, Srimati Nirmala Sitharaman. This budget is applicable for the financial year 2021. So all the amendments will be applicable with effect from 1st April 21 to 31st March 22. Also, after this pandemic situation of COVID-19 crisis, this is the first budget in this new decade, since a new decade has been started in 2021. And also, this is the first time we are presenting the digital budget, laying the vision of Atmanirbhar Bharat, as our Honorable Prime Minister Narendra Modi is focusing on Atmanirbhar Bharat. So this budget has been presented with a vision of Atmanirbhar Bharat. So this was the brief introduction about budget. Now I would like to inform you that there were certain amendments in the budget related to direct tax, indirect tax, and also other amendments. I won't be covering all the points, but yes, I will definitely be covering significant amendments related to direct tax, indirect tax, and others as well. So I would like to start with direct tax amendments first. So the very first amendment, or I can say very most significant amendment in direct tax is the exemption from tax audit. As some of you would be aware that tax audit is applicable to organizations who are having their turnover more than 1 crore rupees. But that is for the normal turnover. In the previous budget, one of the amendment was there for the turnover limit exceeding 5 crore rupees having digitally transactions. So basically our government is focusing more on digitalization these days. So they are basically trying to reduce the cash components of transactions. So to focus on the digital business or the cashless business, they have amended in the previous year the limit of 5 crore. So for normal businesses, the turnover limit is 1 crore. But for the businesses who are fully digital, or I can say 95%, more than 95% of their business is fully digital, for those businesses, the turnover limit was 5 crores for tax audits. But in this budget, they have increased the limit of 5 from 5 crore to 10 crore. And now all the businesses going digitally up to 10 crore are not applicable for tax audit. So this is a very major amendment. So this is really boosting the economy to go for digital business and to go for cashless business. So this was a very important amendment from direct tax point of view. I would like to go with the next amendment. Also, one of the major next amendment is related to the relief to senior citizens. So there are many senior citizens in our country who have to file their income tax returns just because they are earning pension incomes. As after retirement, many of the citizens get their pension incomes. So the senior citizens who are above 75 years of age and earning pension income as well as interest income from banks, and usually banks deduct TDS on the interest incomes. So for those senior citizens who are earning pension incomes and having interest incomes on which TDS is already been deducted, is not required to file income tax returns from this amendment. So this is a major relief to senior citizens. They do not have to hurry to CA offices or to other tax practitioners for filing their returns. So it's a relief for senior citizens if they are earning interest income and also TDS is already deducted on their interest income. So they are not required to file their income tax returns. So this was a very good amendment for senior citizens of our country. Okay. The next amendment is related to reduction in the time limits for, I can say, notices. So usually what happens, income tax returns are filed and then they are processed and then they get maybe after some years they get notices for asking more information about the returns filed, for more details. So earlier the income tax department was allowed to go till 6 years from the end of their assessment years for filing, for sending notices to them. But and what happens was, what has happened before 6 years, we are not able to recollect it, or the income tax return filers are not able to recollect it, what was being filed, what the transaction was about. Yeah, okay, briefly we would be having knowledge, but it is not possible to detail like and recollect what all was happened 6 years back. So to reduce this, to reduce the burden, compliance burden on the income tax preparers or income tax filers, the period has been reduced from 6 years to 3 years. So now the income tax department can go back only up to 3 years. Yes, in some extraordinary cases where they are finding that the undisclosed income would be more than 50 lakhs for a year, then they have the, I can say, power to go beyond 3 years to go up to 10 years. But only, so previously there was no limit, but now there is a limit of 50 lakhs or more. So if they find that the undisclosed income in any financial year is more than 50 lakhs, then they can go up to 10 years. Also, to bring certainty, I can say, in the income tax proceedings, they have also reduced the time for general assessment and processing of income tax returns by 3 months. So initially we used to file the return, it used to get processed probably after 1 month, 2 months, 3 months. But now the processing has become so quick, like we file the return and the return is being processed within few days. And even I can say the refund is, if someone has is claiming refund, even the refund is given or claimed in within few days. So that is a very quick, or I can say, amendment, or they have really come on their toes to process the returns very quickly, so that the income tax return filers does not feel any like pressure or anything. Okay. Next amendment is related to the Faceless Income Tax Appellate Tribunal. So nowadays, in this COVID situation, everyone has gone faceless. So there is no need to go to offices, there is no need to come to colleges. So everything has become work from home, study from home. So similarly, yes, our government is also becoming, I can say, faceless or digitalized. They have also established this mechanism of National Faceless Income Tax Tribunal Center. So now all the appeals, appellate tribunal is related to the appeal matters. So now all the appeals would be discussed online. All the communication would be faceless. There is no need of human intervention. Sitting at the departments, or people need not go to visit to income tax departments for submitting their documents and all. Everything is going online. So now notices come, it has to be replied online with supporting documents, proper annexures, and further reply is on online only. Yes, if whenever personal hearing is required, it shall be done through video conferencing. So yeah, majorly this amendment is after this COVID-19 crisis. But yes, this is very beneficial for future also. Everyone need not go to income tax departments and indirect tax departments for their uh, notices and document submission. Um, the next amendment is, uh, it is not basically amendment of this year. It is just an extension of the earlier amendment. So tax benefits is being given to startups. Our country is hugely promoting startups for opening their like businesses, manufacturing, service, or other. So this in order to incentivize setting up of more startups in the country. So already startups are there, but yeah, in order to promote them, in order to motivate them, earlier tax holiday was being given in the earlier amendment, in the earlier budget tax amendment was being given, tax holiday was being given to the companies having startups. So now earlier this amendment was only up to last 31st March 21, but now this has been extended by one more year, and it is extended till 31st March 22. Also, any capital gains arising and then the gains being invested in setting up of a new startup is also exempt from tax. So this is also an extension. It's just the eligibility period has been extended by one more year. The next amendment is related to provident funds, or I can say rationalizing of tax-free income interest on provident funds. So earlier, interest on provident fund was fully exempt. So any interest earned on employee contributions provident fund was fully exempt. But now this amendment is basically implemented to cover the huge interest earning employees. So now there has been a restriction imposed on the exempted interest income, and now the interest income earned on employees provident fund contribution is exempted only up to 2.5 lakh rupees. So earlier there was no restriction, so all the interest income was fully exempted, but now interest income on provident fund up to 2.5 lakh rupees is exempt for taxation, but Post that, it will be taxable. So this is also an important amendment. They have uh, put a restriction on the interest income. So again, this is also for high income earners. Okay. The next amendment is related to exemption for small trusts. So there are many trusts running in our country related to educational institutions, hospitalizations. So usually trusts are being exempted from small trusts or charitable institutions are being exempted from certain compliances and certain taxation, certain rules. So there was a certain limit of 1 crore rupees. So the annual receipts for the year up to 1 crore rupees, they were treated as small trusts or small charitable institutions, and there were certain exemptions, or I can say reductions in compliances to those trusts. But now, as we have earlier seen in the tax audit also, they have increased the turnover limit for digital transactions from 5 crore to 10 crores. Similarly, over there they were promoting more of digitalized transactions. But for here, small trusts, the limit or the turnover limit of 1 crore have been extended to 5 crore for non-applicability of various compliances. So there are certain approvals being required. There are certain compliances which every trusts or education running educational institutions, hospitalizations need to follow. So for those small, we can say, so see, basically, see, they don't have to put the tax burden on the small income earners, or for those who are like startups, or those who are running small trusts and charitable. So it is very good. So if anyone is running small trusts or charitable institutions related to education or hospitalization, so that's a good thing. So the government is trying to reduce the tax burden, reduce the compliance burden for those organizations. So this amendment is moreover related to that only. Okay. So next amendment is related to the timely deposit of employees' contribution to labor welfare funds by due date. So what happens when the employee contribution is being deducted by the employer? The employer has to pay that employee contribution to government on a certain due date. So it should be it has to be paid before that due date or up to that due date. But there is delay in deposit of the contributions. So what happens, the employers deduct their pfs from the employees salaries, but they sometimes they may do delay in payment of employee contribution to the respective departments or to their respective organizations. But now, and what happens is employer gets a deduction under section 36 for the employee contribution deducted. So now to basically ensure timely deposit of employees contribution to labor welfare funds by due date, they have in amended this or brought this amendment to ensure timely deposit of employees contribution to these funds, so that, so what the amendment is, if there is a delay in payment of employee contribution to labor welfare funds, the employer won't get any deductions on the same. So it is very important for an employer to get the deduction for that. So every they are deducting the taxes of employees, provident funds of the employees, and they claim deductions for this thing. But now they have ensured that if the payment is not done on time or before due date, then the employers won't get any deductions for those contributions. So this is a boost for the employers to ensure there is timely deposit of the employees' contribution to the labor welfare funds. Next amendment is related to non-filing of return by deductee or collectee. So what happens is everyone files income tax returns, or I can say not everyone files income tax returns. So some people file their income tax returns and some people don't. Also, there is a particular reason for filing of income tax returns. So for a person who is earning a nominal income, whose income is not exceeding the basic exemption limit, would think, why should I file the income tax return? So, or else I'll have to pay taxes, or maybe I get any notice. So it is better I will not file the income tax return. So there are certain people who think in this way. So yes, there is no compulsion on anyone to file income tax return, but yes, it is being promoted, or it is being motivated, encouraged people to file their income tax returns so that they get certain benefits, or they should be a good citizen of our country. But it is not a mandatory compliance for filing of income tax returns who are not earning income tax, who are not earning income more than the basic exemption limit. So, but what happens is, sometimes if we are earning some income and TDS is being deducted on those incomes. So, for example, if I am earning certain income and TDS is being deducted on my income, so I will feel, okay, tax is already deducted. So why should I file my income tax return? If I'll file my income tax return, I will have to showcase all my incomes and I'll have to pay more tax. I'll end up paying more tax. So, okay, TDS is deducted. Okay, that is okay. Why should I pay the return? File my return and pay more tax. So this type of thinking is there. But to stop this, or to basically encourage people to file their income tax return, it is being amended that in whose cases the TDS has been deducted in 50,000 or more for the past 2 years and not filed the return of income. The rate of TDS or TCS shall be at the double of the specified rate, or 5%, whichever is higher. So if any person is earning an income and TDS has been deducted on that income, so and the person is not filing the their return for the next 2 years, so then the TDS rate. So for example, if currently my TDS rate is being deducted, if my income is being deducted at 10% TDS and I'm not filing the return for next 2 years, so the rate will be doubled. So from after 2 years, if it is a recurring income, then the TDS will be deducted at the rate of 20% on my income. So that will be again a loss for me. So to avoid that loss, I will start filing income tax return, and I'll file all my returns properly and also include all the income earned by me. Also, this provision is not so this is for separate or different type of TDS is being, so this is not applicable for salary income or payment to non-resident or lottery, because for salary income, for lottery income, already TDS is being deducted and people also file their income tax return. So this is not applicable for those employees or those people, not particularly employees. I hope everyone is still awake and listening to my webinar, and hope I'm enjoying also. So next I will move to the another amendment for direct tax. This is also a very significant amendment in direct tax, or I can say more of TDS. So if we see, usually TDS is deducted more on services, or I can say salary, interest income, and commission income. Professional services are being done. So usually TDS is the concept which is more or less involved or related to the services. But this time, to cover the scope of goods as well, there has been amendment, or basically I can say to widen the scope of TDS, there is an amendment that there will be a TDS deducted on purchase of goods exceeding 50 lakhs in a year. So earlier there was no such amendment, or there was no such compliance for deducting TDS for purchase of goods. But now, see, obviously, if any person is earning or is purchasing more than 50 lakhs of goods, and so if we are purchasing, so someone is selling, so the seller has to pay their income, has to pay their tax on the income earned on purchase of 50 lakhs or more than 50 lakhs of goods. So that is obviously covered. But to ensure more tight controls, or to ensure more stringent basically compliances, they have brought this amendment of deduction of TDS on purchase transactions exceeding 50 lakhs in a year. But again, who are purchasing more than 50 lakhs a year would be definitely a good organization, a good I can say turnover, having a company would be having a good turnover. So again it should be not there like कि चलो कोई एक साल में or once in a while they have purchased goods more than 50 lakhs, उनका turnover इतना नहीं है, but कोई एक साल में हो गया, but there is no turnover. So again, the government doesn't want to give any burden on those taxpayers. So this has again come with persons whose turnover exceeds 10 crore. So there is a dual mechanism over, or I can say dual condition is there. So a person should be having turnover of more than 10 crores plus purchase transactions of more than 50 lakhs in a year from a single vendor, I can say. So if I am purchasing goods from, I can say, three vendors, and one is more than 50 lakhs, one is 25 lakhs, and one is 75 lakhs. So the TDS has to be deducted only for more than 50 lakhs and for 75 lakhs. So for 25 lakhs, there is no need for deduction of TDS. But the condition is the turnover should be more than 10 crore. Basically, this amendment is implemented for covering tax of large suppliers, because what happens is, what is the difference between TDS and I can say normal? If I'm purchasing goods from someone more than 50 lakhs, so that person will automatically file their income tax returns and pay their taxes. But there is a timing gap. So if I will purchase goods from a particular person now, I will have to deduct. There are certain compliances for, there are certain provisions for TDS. So when TDS should be deducted, that is a separate part. But yes, definitely it has to be deducted at the time of payment or at the time of purchase. So it has to be deducted immediately. So we do not need to wait till last year, till the time of filing of returns. So the TDS has to be deducted immediately. So the government will anyways get tax on the same. So it's better to get it early, and we don't know, like the other person may bring some other expenses, incur some other expenses and all. So that is a separate thing. But if the transaction is more than 50 lakhs and the turnover is more than 10 crores, then the TDS has to be deducted on purchase of goods as well. So this was again a significant amendment in this budget. Okay. Next amendment is related to the affordable housing or rental housing. Same way, this is also an extension to the earlier amendment. So in the July 2019 budget, this housing for all and affordable housing uh, amendment was there. So there will be an additional deduction. There will be a deduction of 1.5 lakhs for the interest component being paid for all those who are covered under housing for all and affordable housing schemes. So earlier this amendment was till 31st March 21, but now this is extended by one more year. So this additional deduction of 1.5 lakhs will be extended for more year till 31st March 2022. This is again a boost for the people to so affordable housing. There are certain limits. So for example, the limit is like, if they are having their, if anyone is purchasing house and the cost of that house is less than 50 lakhs. So for less than 50 lakhs, they will get certain additional deduction of interest of 1.5 lakhs. So basically they are promoting people to purchase houses. So if we see the trend of government, so they do not want to earn the low income, they do not want to put any burdens on the low income earners or the nominal income earners or the middle class people who are having salaries and everything. So anyone buying house up to 50 lakhs is okay. So they want to motivate them to purchase their houses and also get deductions, certain deductions and reduction in taxes for those things. So this was the amendment related to housing. Okay. Next amendment is related to the NRIs, non-resident Indians. So there are many Indians who are residing abroad, who have left the country for so and so reasons, maybe for earning more over there or due to any reason. But we see, obviously, if someone is going abroad, that doesn't mean they won't come back to India. They keep on coming to and fro to India and abroad. They have their bank accounts in India. So they also keep their FDs in India or any other investments, and they get certain interests or certain income on their investments in India as well. So what happens is they always struggle between the payment of taxes in India, in over there, there is also a chance of double taxation. So they might be like resident of that country as well. So they keep on struggling. Also, the taxation periods may differ in this year over there. Or also they may get, for example, if there a person is an NRI and he's earning interest income of say 2 lakhs in India, and the tax is being deducted, obviously the tax would be deducted on that as well. So what happens, that person needs to file their income tax return, and if the person is not having any other income, may also claim the TDS as income tax refund. So basically they have to struggle between taxations over there. And so it has been proposed to notify certain rules for removing the hardships of double taxations, for removing the hardships to NRIs. So basically, it is not like our country is promoting or want to trouble people who are staying in NRI, who are staying in out of India or abroad, and also having their interest incomes or other incomes in India. So basically, to reduce the trouble for the NRIs, to reduce the burden on them, the government has proposed to notify certain rules which would be known to us later on. So this was the amendment related to NRI people. So these were the major amendments being covered related to direct tax. So this were like more of I have covered all the amendments related to direct tax. So now I would like to go with the indirect tax amendments. Okay. So, as we all know, one of the major important indirect taxes, the GST, goods and services tax. Also, there are certain CGST, IGST, SGST rules. There are certain acts as per CGST and IGST. So returns have been yeah. First of all, I would the finance minister has really appreciated the GST department. So they have really improvised their GST mechanism. So they have implemented quarterly filing of returns and everything. So if previously what was it? So every person has, or every GST payer has to file their income tax returns monthly, and the GSTR one was being filed quarterly. But now they have really implemented or established mechanisms to file their income returns quarterly, GSTR 3B, GSTR 1, and also certain others. Also, one of the major, I can say, provision as per GST was for mandatory requirement of getting their accounts audited as per GST law, and also filing their reconciliation statements. So there was an annual return which was which was like which has to be filed for the GST payers, taxpayers. But in this budget, certain changes have been in the GST Act and IGST Act on the basis of recommendations by the GST Council itself. So they have removed the mandatory requirement of getting annual accounts audited and reconciliation statement, filing of the annual return on self-certification basis, and also charging of interest on net cash liability with effect from 1st July 17. So from that time only, it was being like we have to file, the GST payers have to file their annual return. So the dates were being kept on extending. So but now they have removed this mechanism. Yes, definitely there are certain flaws for this as well. So they will definitely come out with rules or certain limits on which, like about this limit, audit should be done, GST audits should be done or not. And the low income or the low GST payers need not file their annual returns. So this is one of the major, I can say, issue which has been in the indirect tax amendments which has come across. Also improving compliance. So there are certain compliances in the GST, like who can avail the input tax credit and who cannot. So it is also been amended or brought through this amendment that availment of input tax credit should be given only when the details have been furnished by the supplier in the statement of outward supplies. So there is certain statements like statement of outward supplies, inward supplies. So only if the proper details are being submitted by the GST payer, only then the input tax credit has to be availed. So this were like one of the important amendment in relation to the GST, I can say, or the indirect tax. The second amendment in indirect tax is related to the custom duty rationalization. So there have been certain changes in the rates of custom duties. One of the important change was, as we know, the electronic and mobile phone industry is in very form these days. So everyone buys new mobile phones now and then and all. Also, the domestic, after this COVID crisis, we can say the imported mobiles have been reduced, and the purchase of domestic mobiles have been increased. Domestic electronic manufacturing has grown rapidly, like mobiles, chargers, all other equipments related to. So we need earphones, we need everything, mics, chargers, portable Bluetooths, and everything. So basically, the things related to electronic and mobile industry have really boosted up in this crisis. So for this, or I can say for greater domestic value addition, a few exemptions are withdrawn on. So obviously, see, the industry which will grow, government also wants to earn on those things. So obviously, if they see the sale of this and this has increased, so definitely they will also try to earn income on that, because if everyone is purchasing mobiles and everything, so basically they want to promote more for domestic manufacturing. In That's why they have a, some parts of the mobiles will have changed from nil rate to 2.5%. So earlier, the custom duties on some parts of mobiles like chargers and some other parts which are detailed explained, so were previously it was covered under nil rate, so they need not pay any custom duties on that. But now they have put a custom duty of 2.5, a moderate rate. It is not very much, but yes, 2.5% of custom duties have been incurred on those. The another amendment related to custom duty rationalization was again for iron and steel. So many recently we have heard that the steel, or I can say many MSMEs or other user industries have been severely hit by sharp rise in iron and steel prices. So we have seen like the prices for steel, irons, they have increased a lot. So to basically reduce that effect, they have reduced the custom duty to 7.5% on some of the parts of semis, flats, products of alloy, stainless steel. So there is a detailed annexure which has been provided for all, like what all is covered in that, what all is not covered in that. So that type of reduction in custom duty is there. Also, to provide a relief to metal recyclers, mostly MSMEs, duties is exempted on steel scrap for a period up to 31st March 22. So for steel scrap, duty is scrap. So scrap is the waste products or the byproducts which are being manufactured, which are basically developed during manufacturing or during other or processings. So a relief is being given to the recyclers, metal recyclers, that steel scrap, uh, there will be no duty. So duty is fully exempted up to 31st March 22. Also for copper recyclers, duty on copper scrap is reduced from 5% to 2.5%. So this was one or two amendments in tax reduction or reduction in custom duties. Also, there are certain other changes in rates of customs in textiles, chemicals, gold and silver, and capital equipment, and certain other parts which I am not covering currently due to restraint of time. But yes, there are certain changes in custom duties as well. So, these were the major amendments related to tax and indirect tax, or I can say the taxation systems. There are certain other amendments which I felt to share with you, which are important or which are significant. So, mostly tax, yeah, there were. If you see on an overall basis, so we feel there are no more amendments in this budget. So there are no like significant amendments. So as last year the income tax slabs were being changed, the slab rates were being changed, but currently there are no changes for that. So but yes, if we see in more detail, there were many important amendments maybe related to GST or maybe other like tax audit, turnovers and everything, TDS. There were certain important amendments related to TDS as well. So many important amendments were there related to taxations also. Other than taxation, there are few other amendments which I would like to share with you. Okay. So, in other amendments, the first amendment is related to the textile industry. So, as we all know, there are certain SEZs and certain STP zones which are there. So what is SEZ and STP? STP are like software technology parks. SEZs are basically special economic zones. So there are certain zones, SEZs, STPs, which get many exemptions, many tax relaxations, and other reduction in compliances for SEZs and STPs. Why these zones are being created? To promote. So since technology, we know it is in full form these days. So technology, IT, this industry is really growing in a rapid pace, I can say. So to boost them, they have created STPs and SEZs. Similarly, to boost the textile industry, to go global, or I can say globally competitive, they have launched this new scheme of Mitra. Basically this is like textile parks are being created. So this scheme is to promote like textile industry. So as STPs and SEZs were created, similarly we have created this Mitra. So this will be launched soon. So this, what will this ensure? This will create a world class infrastructure with plug and play facilities to enable create global champions. Now what is plug and play facilities? Plug and play facility is nothing but our current situation. So currently we are working from home, sitting at one place and ruling the entire world, entire country. So working from home also, everything is being is possible. So we are doing audits, we are filing returns, we are fulfilling all the compliance norms. So similarly, plug and play facilities are sitting in Mitra zones, sitting in particular zones, and dealing with the whole global. So we do not want to restrict our industries or our country to India as well. We have to definitely promote it to go global. So 7 textile parks will be established over the next 3 years. This has been a proposed amendment in this budget. So this was again a good amendment related to the textile industry. Next amendment is related to the change in the definition of company, or I can say small companies. So they have revised the definition under the Companies Act 2013 for small companies. So they have increased the thresholds. See, as the country is growing, the threshold limits has to go above. So earlier, what we used to get in 100 rupees, or I can say earlier what we used to get in 10 rupees, today we will get it in around 50 to 60 rupees. So definitely, when the economy is growing, the turnover limit has to be increased. So earlier, for the small companies, the definition was the companies having paid up share capital exceeding 50 lakhs and turnover exceeding 2 crore will be considered as small companies. But now the turnover limit and as well as the paid up share capital limit has increased. So paid up share capital limit has increased from 50 lakhs to 2 crores, and the turnover limit has increased from 2 crores to 20 crores. So what, by this amendment, what will happen? This will cover more companies as small companies, and this will benefit more than 2 lakh companies in easing their compliance requirements. So there are certain reduction in compliances and certain exemptions being given to the small companies. So by covering this, by increasing the paid up share capital limits from 50 lakhs to 2 crores and the turnover limit from 2 crores to 20 crores will cover more companies under the definition of, under the umbrella of small companies basically. Also it has been said, so there is a portal called MCA 21 which is for the ROC compliances, or which is for the company related matters. So they have also said that they will be launching data analytics, artificial intelligence and machine learning driven version of MCA 21 version 3.0. So this version will have more additional modules for e-scrutiny, e-adjudication, e-consultation, and compliance management. So as we have earlier also seen, so everything will go faceless. So definitely companies act portal will also try to ensure more artificial intelligence, AI techniques, machine learning techniques to go with the portal more user friendly, more quick, and more e-friendly, I can say. So this was the major amendment related to the companies matters. Also, the insurance sector has been promoted. So, as we know, during this COVID crisis, the insurance has played a major role. So, anyone suffering from any of the illnesses are covered by insurances. So, to increase more or to boost the economy for insurance sector, it has been amended to increase the permissible FDI limit from 49% to 75% insurance companies and allow foreign ownership and other safeguards. So they have increased this limit from 49% to 74% to basically cover more, so that foreign investors should also come to India and invest in the insurance sector. Also, see, okay, that is a good thing, like we are allowing or we are inviting the foreign investors to our country, but definitely the control should be to India only. So the amendment is this: under this new structure, the majority of directors on the board and the key management persons would be resident Indians. Resident Indians means who are Indians. So NRIs and non-residents won't be covered, or the foreign people will not be covered, with at least 50% of the directors being independent directors and specified percentages of profits being retained as general reserve. So yeah, definitely they want to allow foreign people to come to India, but definitely they will put the control to Indians only. They will give the control to Indians only. So this was the increasing of FDI limit to insurance sector. The next amendment is related to the migrant workers and laborers. So for this, the government has launched the One Nation, One Ration Card schemes. So earlier, what people used to claim their ration, people have their ration cards, but they stay in one state and their ration card is of another state. So people can't claim their ration. So for this is more for the below income earners, like below wage earners people, like who are claiming their rations. So earlier, it used to be, so if my ration card is for a particular state, for example, say Karnataka or Punjab, then I'm staying in Mumbai in Maharashtra, so I cannot claim ration on my that ration card in Mumbai. So if my family is, or if for example, if I am here, I'm having the ration card for you, and if my family is living in some another state, so they cannot, we both cannot claim the rations. But now under this scheme, migrant workers, so who are migrating from one state to another state, would be majorly benefited. So those staying away from their families can partially claim their rations where they are stationed, and their families who are staying in their native places can also claim their rations. So this One Nation, One Ration Card plan is under implementation. It has been implemented by 32 states and UTs, reaching about 69 crore beneficiaries. So there are so much people who are being impacted by this different ration cards for different states. So this way, it is a major benefit for the migrant workers and laborers. The next and the last amendment for the day is related to the skilling. So there are many students, many freshers, or people working in jobs who are having their degrees, but there is some lack of soft skills, or there is some lack of trainings, we can say, for our country people. So in 2016, government has launched the National Apprenticement Promotion Scheme, so to promote the national training or national apprenticeship for the people, or for the graduates, postgraduates, for people who are basically for the youth of our country. So this scheme will be realigned under the existing scheme of National Apprenticement Training Scheme for providing post education apprenticement, training of graduates, and for diploma holders in engineering. So there are various courses, but see, the soft skills remain the same. So if any person is being graduated from any other, I can say, sector, maybe from commerce, arts, or science, or from IT background, or from anywhere, but the training should be given to them for the soft skills. So now the government is definitely promoting this, and initiative is being taken in partnership with UAE to benchmark skill qualifications, assessments, and certifications, accompanied by the deployment of certified workforce. So it has been initiative has been taken, in the talks are going on with UAE, with United Arab Emirates. Also, a collaborative training inter-training program (TITP) is being initiated between India and Japan, which will also facilitate transfer of Japanese industrial and vocational skills, techniques, and knowledge to India. So we usually say like foreign people are so well cultured, well groomed, their skills are so good that so yes, definitely soft skills play a very important role in today's world. So to considering that in mind, our government is also promoting those skills and trying to ensure that our country youth or our country people should also get all the well expert and the best skills which are globally acquired. So in that considering that initiative in mind, there are certain initiatives being taken with UAE and Japan to increase the skills of our country youth. So this was all about the amendments related, or I can say the highlights of budget 2021, which were significantly important, and we all should be aware of those amendments and implementations which are being proposed in the budget. So this was it from my side. Hope you all have enjoyed. If there are any questions, I'll hand over to Deepak sir to kindly let me know.
Thank you very much, madam. Very excellent session, knowledgeable. We received lots of comments. There are comments from different participants from all over the country that this session was really inspirational, excellent discussion, then informative and useful presentation, very nice explanation. Really, this budget amendments are really explained in a very simple words by CA Sonam Ahuja madam. And we received a few questions. I would like to ask madam few questions which are asked by our participants. And a few questions have been sent to me on WhatsApp also. The first question is from when the budget will be applicable. See, the budget is presented in the parliament, but actually when this budget will be applicable.
Okay. So see, this is the budget. These are the proposed amendments which are being put in the budget. But a bill will be passed for these budget, and the final amendments will be applicable from 1st April 2021. So yes, though the budget has been presented in the month of February, but it will be applicable from 1st April 21. So the applicable date.
Okay, thank you, madam. The next question is asked by Assistant Professor Reena Mishra, madam. She asked that what is the term tax holiday refers to and how it is useful to new startups. Tax holiday, what is this term about?
Yeah. So this is the tax holiday period. What is tax holiday is? So there has been so as this tax holiday is promoted to basically one of the amendment in the budget was related to startups. So what is this tax holiday is? There are certain exemptions or relaxations being given to certain companies. For example, if a company has to pay tax initially it is very difficult to earn income, to set up the business, to start a benchmark and to set a benchmark and earn income. So initially for any startup it is very difficult to earn income, to cover all the expenses and also to pay tax along with them. So a certain tax holiday is being given to the respective companies. So say for example a tax holiday of 5 years for certain companies, a tax holiday of 10 years. So for that 10 years they need not pay taxes. So a holiday is given to them as we are working somewhere and we get holiday. So for those holiday period we don't do any work. So similarly for that tax holiday period no taxes are being has to be paid by them. So once the tax holiday, see, okay, they are motivating us to not to pay tax, but that doesn't mean they will allow us to not to pay tax forever. So definitely when we are earning good, when our incomes are good, when our turnover limits are good, tax holiday has to be paid. So tax holiday is basically a I can say stoppage of taxes for a certain period of time, for a certain limit, and after that the taxes would be paid to government. So this is what tax holiday is.
Thank you. Very nice answer given by Madam. See, another question is there that why most of the exports are zero rated, whereas it may result into good revenue generation to government.
Okay. So see, government is definitely government want to like want income. They want income generation, but more than that, they want the growth of the economy. So yes, many of the exports are zero rated, or they many of the exemptions are in fact given to exports. But see, if we export a particular product, a product of India, a product of our country, that will create a name for our country in the whole world. So that will create a global impact. So more than earning of income, it is important for our government, for our country, to create a name of India all over the world. So yes, revenue generation is important. There are certain other aspects through which they earn revenue. There are certain other modes, I can say, through which earn revenue. But more than that, when we export, the foreign exchange is coming to our country. The foreign exchange money is being remitted to our country. So that is also more important. So any which ways, it is basically it is any which beneficial for our country only, for our government. Foreign remittances are coming to India. So yes, definitely money is important. The generation of income is important, but more than that, the name of our country is more important. So that is why I can say yes, they are promoting and encouraging people to export to other countries.
One question is asked by two participants, Dr. Minty Sinha Madam and Assistant Professor Varsha Savlani Madam. They asked that what is the rate of corporate tax?
Yes. So currently the rate of corporate tax is 30%. But yes, there is reduction of corporate tax for certain companies, which is to 25%. So so certain eligible companies covered under the definition of certain act is reduction in corporate tax rate is 25%, and currently usually it is 30%.
See, when budget comes, most of the people see what is the income tax slab. So I would like to ask you here that are there any new amendments in income tax?
Yes, everyone expects a lot in changes in income tax slabs, the deductions for ATC and everything. But no, last year there was an amendment in the changes for income tax slabs, but currently there is no such amendment related to income tax slabs. So whatever the new taxation slab rate was being proposed in the last budget is still continued, and the slab is the same as proposed in the last budget.
See, every year government gives concession to senior citizens. So is there any relief to senior citizens in income tax?
Yeah, so as I have already covered also, so yes, there is a relief to senior citizens for not filing their income tax returns, but only if they are having interest income and pension income. So if they are having any other business income, so already the slab rate is for exceeding more than 60 years and for more than 80 years super senior citizens. So already the slab rates are relaxed for the taxes paid for senior citizens. So yes, the relief was only related to not filing of income tax returns for pension and interest owners. So otherwise, there is no any other relief.
One more question is asked by Assistant Professor Reena Mishra Madam. She wants to ask you that what is the most benefited sector in this budget?
So yes, the most benefited sector I can say is, as I have covered, is to go more digital. So the focus for this budget was to go more digital. So one of the important amendment related to the digitalized transaction was the turnover has increased from 5 crore to 10 crore. Also the faceless assessments have been started. So yes, I can see the major, I can say, impacted budget. Also that for the textile industries, we have the sector we have seen they are launching Mitra and all. So yes, I can see the more impacted or benefited sector is this only.
Then another question is asked by Assistant Professor Varsha Saulani Madam. What are the key benefits for general public of this budget post-COVID?
Okay, so the key benefits for general public are definitely as already covered in the different sectors. So for related to TDS, I can say there were certain changes in TDS. Also, there were reduction in certain custom duties. So that is again for the benefit of the public only. Also, amendments in the, like for example, senior citizens, and also GST amendments. GST was also one of the important amendment for the GST payers. So I can say overall, yes, not general public, but yes, different sectors of public have been benefited in a different way.
Really, I think all the questions which are asked by the participants are answered by Sonam Madam. Really, it was very informative and knowledgeable session, and the benefit of this session was taken by many participants all over the country. We are thankful to CA Sonam Ahuja Madam for giving her valuable time and giving us lots of inputs on highlights of budget 2021. We are thankful to founder principal of S.S.T College, Dr. Purswani sir, for organizing such a live webinar for students and teachers and general public for better understanding of budget. We are really thankful to all who have worked hard for the success of this webinar. And last but not the least, we all are thankful to all the participants, all the viewers who were watching this live webinar on highlights of budget 2021 organized by S.S.T College of Arts and Commerce. I would like to mention here that feedback forms link is given in this video, as well as it is sent on the WhatsApp groups. I request all the participants to please fill the feedback form so as you can get your certificates. So here we are concluding this webinar, and I would like to mention here one more thing, that in coming future, we will organize different webinars on various subjects. So be in touch with us. So thank you all of you. Thank you Sonam Madam for coming here, and thank you audiences. Here we are concluding this live webinar.